All right, we are live. Hello, everyone, and welcome to Stock Market After Hours. My name is Mark Rusin. I'm a CPA here in the state of California, and it is great to be back with you guys for another week. We've had a lot going on just in the 3 days of trading that we've had so far this week. We've had AI stuff coming out from China. We've seen a little bit of a stock market crash, especially with NVDA, the largest stock. What was the largest stock in the S&P 500, tumbling 17+%, or nearly $600 billion. So we'll talk a little bit about my thoughts there. And why not throw in some earnings, some massive earnings reports that we've seen already thus far. Again, we're just halfway through this earnings season, or for this particular week right now. So a lot going on. First off, let me know, where are you guys tuning in from? And what have you been buying? Did anyone out there, have you been buying the dip? Scott's been buying some VST and more SoFi. Question for you, something going on with NVIDIA in the after hours here. Lots of volatility, more than usual. So there's a lot of obviously AI related stuff going on when it comes to NVIDIA. So it's been a lot more volatile. It's again, a massive company here. But again, it's trading like it's a small cap. And that's something that's not new to this week. It's something that has been over the course. But right now, unless you're seeing something different, it's down 1% in the after hours. So nothing too out of the ordinary there. John Bircher tuning in. We got Hoagie. Jeffrey, good to see you from Washington. Hello, Matthew, good to see you. Matt Simmons from Maryland. Thailand is in the house. Love it. Ritesh from Boston. Hopefully I said that right. Montreal is in the house. Adam, Johnny. Nort, what are we buying? VGT and a new position in Arista Networks. Rich Diaz in the house with a little SCHD, DGRO, and our QQQM there. Jeff, what are we buying? Picking up some Eversource Energy. Energy got hit rather hard on that AI news out of China. Ritesh, so I got the name right. Perfect. Brazil is in the house. John from Minnesota. What are we buying here? A little FEPI. Or buying it later this week, I should say. That's from Steve. Namaste. ASML had a good little report there. Tesla, please. We'll be trying to touch on Tesla there. So a lot to get into. But before we jump into stocks, I've been wanting to ask this question, for quite some time now. And I think it's always fun to kind of loosen things up in what's been relatively not a great week for the stock market by any means. But what are some of your hobbies outside? The stock market is definitely, something that can be fun, professional, however you want to do it. But what are some things that you do for fun? Let us know in the comment section. I always think it's kind of unique to hear more about, what folks are doing out there. For me to start, something that my son and I love to do is we love looking at baseball cards. So, he's still very young, and I get to coach his little league, and he still loves dad coaching him and things like that. So we're in a unique situation right now where it's fun, and he's really starting to learn the players. So that's one thing that we've kind of picked up from my childhood time was looking at baseball cards. So let me know in the comment section. It doesn't have to be something that you do with your kid, just something in particular that you like to do in general. For a hobby outside of the market there. So let me know. Smoking cigars and some woodwork. Johnny, what is some of the coolest things that you've made when it comes to woodwork? Calisthenics right here. Home brewing. All right, Jeff, up in the Pacific Northwest. I'm assuming some good brews there. Comics for Kevin. Gardening. There's a good one. What else we got? Reading. Love books. I have a neighbor that reads, I want to say she reads a book a week. Loves to read. Guitarist. That's one thing my son is picking up. They have started music lessons. I got my daughter doing, she wanted to do piano. And then my son is learning to do guitar. Rich loves to watch the Chicago Cubs. Board games. Sports. Jeffrey Hatch. Pokemon cards. There we go. There's a collector. Reading and listening to podcasts. Awesome. Beach volleyball. There we go. Must be on the coast somewhere. So that's exciting. Let me make sure we got the right slides up now. So awesome. Well, I just want to do a little icebreaker there. So let's jump into our regular slides now and take a peek at what is going on in the market. Let me move my iPad over since that is clearly in the way. All right, let's get rolling here. Ahmed loves playing soccer. John says, I work all the time right now, so learning investing in options is my hobby. It's a good hobby. That is a good hobby, John, and you're getting better at it each and every week. Mark, are you a Dodgers fan? I am not a Dodgers fan. I am in SoCal, but I grew up an Angels fan. So we usually just like to play between, just the regular season. We don't want to put any extra effort, and we want to go on vacation early. So that's what we do for Angels. We don't like October baseball, apparently, unless it's just the early 2000s. So, but we still root for them. So, all right, let's jump into our stock market after hours and see what's going on in the economy here. So Dow Jones has been the leader, up 5.1% here to start the year. This is our year-to-date numbers. S&P 500 up 2.7 so far. The NASDAQ holding on to slightly below 2%. And the Russell is up 2.6%, giving the S&P 500 kind of a little run for its money there. But I also have the last week. So since we had our session last Wednesday, you could see the figures here on what the Dow Jones and what these major indices have been doing just in a week's time, because it has been a little bit turbulent. We've got some bounces. We've seen some big sell-offs. So we always sometimes as investors need to take a step back, because we kind of get caught up in the moment. We get a little bit emotional. That can lead to decisions that may not be great. I spoke with a number of folks that said, I need to sell NVIDIA now. Now is the time to sell NVIDIA. Boom, the next day it was back up 6-7%. So we don't want to get too, and we want to take a step back and understand, where are things at? We'll let valuation lead the way, not one day's work here. So the Dow Jones continues to climb up 1.3%. S&P 500 for all of that since last Wednesday is only down less than 1%. The NASDAQ, though, has been beaten up pretty hard. It's down 2%. That's a lot in a week's time. And the Russell's down 0.7%. So when you look at it, small caps are still actually performing decently well. And if I look off to my other screen here, I'm going to add and give you guys an update on where the RSP is, just so we know. Again, that's going to be the equal weighted S&P 500. So that's something that I often like to look at to see, is everyone participating? Are the other 493 stocks? Because the Mag 7 gets so much focus all the time that, we strictly look at the S&P 500. But again, there's 10 stocks or so that make up 40% of that entire index there. So when I look at the RSP total return over the last week, it is pretty much flat, down 0.04% there. If I change it to a year to date, and you guys don't see this on your screen, I'm just off on my other screen here. RSP, where we at, total return is 3.5. So 3.5%. So it would be the second leading there under the Dow Jones overall. Oil, not much movement since the last time that we met. I think it was around $75 last Wednesday, down a couple bucks here at 73. And Bitcoin has been pretty much flat, although it did dip back below 100,000 just a few days ago. And now, as of putting together these slides today, we were up in that 104 range. And if I look right now to give you the latest and greatest information, we have Bitcoin sitting right at 103,564. So we've already lost $1,000 in the time that I've put this together. Right now, valuations for the S&P 500 using the forward 2025 estimate of 270 per share gives us a forward PE of 22.4. 10-year average, again, is 18.1. But as we've discussed in prior sessions and webinars and things like that, the 5-year average isn't something we want to put a whole lot of weight into, because over the past 5 years, we've seen that S&P 500, the top there, evolve into much more of those industrials to now being much more tech heavy. Those tech heavy provides more growth. More growth stocks usually coincide with higher multiples at the same time. So we want to put it into context there. Not saying it's not overvalued, because 22 times for a large index of 500 companies, many of those companies not being ultra fast growers, I should say. Something more normal around 20 times is something I would be a lot more comfortable with. Doesn't mean that we're not buying, however. When we look at interest rates, though, interest rates have continued to come down. And over the course of the past few weeks and few sessions that we've had this live show, I've continued to say that I think we've kind of seen a bit of a top of when it comes to the 10-year, the 2-year, and we have seen those interest rates start to level off a little bit from that perspective. We were down big last week from the last session we had, down to 4.6 and 4.3 on the 10 and 2-year. We are down yet again just a week later. So 10-year sitting at 4.5, the 2-year sitting at 4.2 there. So we're continuing to come down on those, which as they come down, that bodes well for which sectors? Small caps. It bodes well for companies continuing to invest, could be industrials, and it's going to bode well for one of our favorite sectors, REITs, that we talk a lot about here. So things to continue to watch that maybe we don't look at every day, and then you could start kind of adding those there. So looking at the fear and greed index, again, not a lot of change from where we were at last week. We were right on the cusp of fear. Even with that big sell-off, we're not sitting in fear levels. We're just kind of in neutral borderline there on fear with a rating of 46 here. So now let's go over to the iPad and take a look at what's going on in terms of sector performance now. So bring that one up for you, and we could take a peek at what has been working and what hasn't been working. So hopefully you can see the screen now. We take a look here. So these are going to be your year-to-date figures. So we have communication services at the top, up 6.6%. That's going to be companies like Meta and Alphabet that lead that sector, followed by healthcare, defensive sector. Financials continue to do well since post-election there and into 2025. Materials and industrials could be viewed as defensive in a way, but also more geared towards that Trump type trade. Consumer discretionary going to be led by the likes of Amazon and Tesla. They are up 4.2%. And then energy. So as you can see, very different from these year-to-date figures that we were looking at pretty much all of last year. When we looked at most of the year last year, it was maybe 3 sectors that were above the index as a whole, which told you that those 1 or 2 sectors, usually communication services, usually technology, are pulling the weight of the entire index. And what do we see? All of the other 8 different sectors all underperforming the index. Now when we look, it's pretty close to split and split, which makes sense when I talked about that RSP, the equal weighted S&P 500, performing quite well and actually outperforming. These are things that we like to see in sustained bull markets. Not a few companies working, but the majority of companies working. So that's definitely something to look at. The only sector that is in the red right now as on a year-to-date figure is going to be information technology. Who would have thought? But a lot of that obviously has to do with the sell-off that we saw in NVDA there. Over the past 3 months, which is going to dip back in towards the end of 2024 there, you could see, again, this is what we saw most of last year. 2 or 3 sectors that were outperforming the index as a whole. These 3 right now: consumer discretionary, communication services, and financials, where financials has gained a lot of that pretty much since the end of, or since the re-election of the Trump 2.0 group. And in the past 3 months, the big laggards continue to be real estate, materials, utilities, healthcare. Look how many we have in the red there. So a lot of those haven't been performing quite well. Now let's turn our attention to the Fed. So we had a Fed meeting today. It pretty much had a decision that we thought was going to happen. Rates are staying paused right now. There's no cutting that's been talked about. But when I pulled up these probabilities, again, these go into the meetings that are coming into the future. So we just had our January meeting. So the next meeting will be on March 19th. So as you can see there on the screen, and then followed by a May meeting and then a June meeting. So right now, it seems like we're going to be keeping rates kind of status quo. So right now we sit at this 425 range that you could see right there. Most of the futures are believing that we are going to stay right there for the next 2 Fed meetings. And again, it's like beating a dead horse. We've talked a lot about the Fed and the decisions that they've made. I believe, and this is again my personal opinion, that they moved too fast. Seeing that we continue to have unemployment sitting right around 4%, which is very solid. The job market continues to appear to be on solid footing. I'm not going to say it's strong by any means, but there's no way, shape, or form that someone has an argument to say that it is a weak job market right now. So again, the Fed has 2 primary roles: is to for monetary policy, is to keep inflation intact and to support the job market. So too high of inflation puts too much pressure on the consumer, too much pressure on businesses, which could lead to layoffs. So these are things, but also by lowering interest rates could bring back inflation. And again, we don't want to see any of that because it continues to be a problem. It continues to be sticky. It continues show signs that we're not really all that close to that 2%. I mean, you could say that we're getting closer to 2% just because time is going by, and now those comparables are going to get a whole heck of a lot easier. But if you look at household receipts, things aren't getting tougher, or things aren't getting easier, I should say, for consumers out there. Trust me, I feel it just as much as most people out there. When you go to Costco and it's like, oh, what's the over under today? It's, it used to be $200, now it's easily 300 plus, and we're just, not even buying anything out of the ordinary here. So it could be definitely consumers are feeling it out there, and that's something to be so much for transitory. Nathan said, yeah, how much do we hear that word for so long from the Fed? And it was just they're not perfect by any means. I think they've done a decent job overall. I just felt like they were way too late to the party, because they continued to try and tell themselves that this was transitory way too long, and then they were early to leave the party. And that's something that I think they're going to kind of regret based on the data that we continue to see here. And now we're going to have this situation where interest rates are going to be higher for longer. Why do we need it? Why did we move to cut 100 basis points so quickly, given the data that we have seen and we continue to see? It's not like anything surprises are popping up from that standpoint there. So that's kind of my take on the Fed. And you could see here, once we get to the June meeting, that's really when we're going to start seeing some differences in the next cut. So we're at a 48%. Again, it's not overwhelming, but they believe a 48%. We will get a 25 basis point cut. We will stay in that range pretty much through the end of the year until December. So right now, the futures are looking at 2 cuts for 2025. We will have one in June, and then we will have another one in December. Again, this is kind of a moving target from that standpoint there. So who knows, but we're going to continue to give our opinion on things. And John Bircher says the over-under is always 300. I know. We've tried to switch it up on certain things, and we still can't get under that 300 unless I go and, just buy a gallon of milk and some eggs maybe. But all right, so let me take this opportunity to tell you guys about our best, most attended, I should say, workshop. We try and do workshops all throughout the year. We'll do things on, stock market kids. We do things on options. We do things on valuation. We do things on REITs. And these are very well received. But this is our number one workshop that we do every couple of months here and there. And we still have a few spots remaining in terms of how much this fills up here. But tomorrow is going to be our exciting stock options workshop one. So it's going to be tomorrow, Thursday, January 30th. It's going to be at 8 p.m. Eastern time. But let's say that you live over in Europe, because we already have a ton of people in Europe that have already signed up. I even have some in New Zealand and Australia. You're going to get the live recording to this. So even if you cannot attend the live show, you will still get the recording. So don't fret from that if the time doesn't work for you, or even if you are here in the States and you're like, hey, I'm working that time, or I'm not available, or whatever the case may be, do know that you will get the recording once you sign up for this workshop here. We're going to go through 6 different strategies that I utilize for my minimum goal of $5,000 per month. Here in January, we are well over that goal. It's been fantastic. Just the other day on the big sell-off on NVDA, for those of you that have been part of my Options Edge Plus subscription, you all know that we were in a trade and out of a trade in one day. Most of my trades aren't short-term by any means. They're a little bit longer term. They're designed for people that may have, 9 to 5 jobs like most of us do, that say, hey, Mark, I can't be in front of the computer every single minute of every single day when the stock market's open. That's no problem at all. We're going to talk about different strategies for those types of folks. We're going to talk about different risk profiles and things like that. High risk, low risk ones. We'll go through a Q&A session as well. It's a fantastic one. We have revamped it completely. So if you've taken it in the past and you want a refresher here, do know that this is a completely revamped workshop that we'll be going through tomorrow at 8 p.m. Eastern time. So it's going to be exciting from that standpoint there. So you can check out the link down in the description below if you are ready to register there. So now let's take a peek and let's keep going here on everything else. All right, Fed Watch, we already looked at that. Now let's take a look at what is in the news, and we have, oh boy, NVIDIA got rocked. So the chip maker fell nearly $600 billion. That's a large number. right there when that DeepSeek. So DeepSeek is the China version of OpenAI. So it came out. They showed different. It's an open source, so you can kind of see the data that's been conscribed there, how the product and the large language model was kind of put together. But there's still a lot of unknowns, and a lot of folks are fixated right now on this China firm putting this DeepSeek LLM together for roughly $5-6 billion, whatever the number is from that standpoint. But there's a little caveat in there that doesn't include all of the costs that went into the research and the early development before they got into the open source piece of things. So there's that asterisk of sorts. Again, this is China. So what can we and what can't we believe? Supposedly it has been built by utilizing NVDA chips. So there's going to be a component there with a lot of the trade restrictions that are going on. Besides the fact here, and there's a lot of folks, I'm going to put it right up front, that there's a lot of unknowns here. I personally believe, and there's a lot of people on both sides of the aisle here that believe, hey, this is something that's very serious. This is something that is going to play a huge role. And I've even heard that this is the demise of NVIDIA. I believe all of that is just a bunch of hogwash, and it is a complete overreaction here. Because when you look at the chip demand that's still out there today, there's not companies coming out saying, oh, we are going to utilize this. Can you imagine companies coming out right now and saying, hey, we're actually going to use and input all of our customer data and everything into a Chinese AI model from that standpoint there? DeepSeek has already even gotten hacked, and they've only been out since last weekend from that perspective there. So a lot of things still to pass through. I personally believe, though, it is a complete overreaction from that standpoint. Now, that doesn't go to say that it won't have an impact, because I believe it will have an impact, but I think it changes for a few folks. One of those companies is going to be the likes of Meta, who recently reported earnings. But let's talk about that near $600 billion loss that NVIDIA just had right here. Companies that have a market cap of around $600 billion or less, that would be what NVIDIA lost would be like these companies individually completely going to zero. MasterCard, United Health, ExxonMobil, Costco, the Home Depot, Netflix, Oracle, and the list goes on. We could keep going and going here with massive companies, Texas Instruments, Verizon Wireless, so on and so forth, Raytheon. Let me show it a different way, though. How about nearly $600 billion in market cap combined? All of these companies right here, Palantir, AT&T, Verizon, Raytheon Technologies, all four of those companies are right around $600 billion in terms of market cap. That is how much that NVIDIA lost that one day with the DeepSeek news that came out. That was Monday. DeepSeek came out at the end of the prior week and was being digested over the weekend there. So massive. We're talking about massive. But lo and behold, I think Jensen Huang is still doing fine. He's still one of the richest individuals in the world. So I don't think he is shedding a tear by any means. So again, outside of that, this is a huge week of earnings. Some could say it's the biggest that we've had so far, and I would agree with that. We have the likes of Starbucks and Meta and Microsoft and Tesla and Lockheed Martin, just to name a few companies that have already reported thus far. So let's take a peek at some of these right now. So we had Starbucks earnings came out, and investors were cheering these results. Again, I think this is a overreaction the other way there. So the stock was up 8% today. EPS came in at 69 cents. That is a impressive minus 23% year over year. That beat by 0.02 cents. Revenue came in at $9.4 billion. That's completely flat year over year. And that beat by $90 million. So we're talking about two beats here that they skinned by, just barely got by here. Global same-store sales were an impressive minus 4%. That was made up of 6% declines in the number of transactions they saw across the globe, and offset by them increasing prices. So plus 3% on the average ticket. Again, I'm an owner of Starbucks. I've sold some over the past 6 months, but still own a sizable amount of Starbucks. So obviously I'm going to cheer that the stock's up 8%, but I am not rushing to buy shares of Starbucks up here at $105+ per share. Love the CEO change that Starbucks made here, but this company still has major fundamental issues here. Look at the number of transactions. They have less people coming into their stores right now. So what is the new strategy that CEO Brian Nichols trying to put out? Is trying to get back to that normal neighborhood coffee house vibe is kind of how they put it. Trying to reinvent the menu item, the menu options, not upcharging for certain things like alternative milks, oat milks, and almond milks. And I'm happy about that one because I usually use oat milk from that perspective. But these things aren't going to be fixed overnight. And folks that are rushing to buy this stock at a high multiple with earnings that look like that, I just think that's something that's not going to be, what is the catalyst higher from this standpoint at this valuation? The valuation doesn't make sense to me right here. Again, not looking to sell the rest of my shares right here, but again, not rushing to buy anything by any means. So let me jump over to the iPad real quick to kind of show you guys some figures that we've seen. So we talked about the global same-store sales that we saw, -4%, but let's look at a few other figures here and see how things are going. So outside of that, the other area that I like to look at is going to be China. So the two largest markets for Starbucks are the US, followed by China. Same-store sales declined 6%. That was a 4% decline in actually average ticket. So not only was their ticket number going down, they also saw a 2% decline in transactions, less people buying higher end items. So that's a double whammy right there. The company opened 377 net new stores during the quarter, and right now they have 53% company owned and 47% licensed from that standpoint here. Again, revenues went absolutely nowhere as compared to the same quarter a year ago. Another massive negative right here. 390 basis point decline on operating margins. So we already see revenues have gone nowhere, but this is also a company that's becoming less efficient. So a lot of that probably has to do with all of the union stuff that's going on and how much money they're having to pour in to battle that and things like that. But they're also trying to invest money there. So there's, every dollar of sales that they make, there's less left at the end of the day compared to what we looked at last year there. So again, 23% decline year over year on net income, or EPS, I should say. This is something that was interesting. They're 90-day active members. So a big time rewards membership, a very loyal customer base, sits at 34.6 million. That was growing at a decent pace in the past, only up 1% year over year during this quarter here, and up 2% on a quarter by quarter basis. So compared to the most previous quarter as compared to today. So sure, are we encouraged by Q1 results? Probably the right thing to say, but there's nothing that you really look at from this perspective. Our revenues have gone nowhere. We become less efficient. Our same-store sales are garbage. We have less people coming in the door. There's not a lot of great things to take out of a Starbucks earnings report from that standpoint. So the folks that are rushing to buy right now, doesn't quite make a ton of sense for me. All right, let's take a peek now at Meta earnings. That stock was up 2% when we put this together. Let me give you guys an updated number on where Meta shares are right now. So Meta still up 2%. So we're at 691. So we had for those of you in the options Edge Plus, you know that we had an option play on Meta climbing to the upside. So we're hoping to see a 3%, 4% climb for that to get to max profit tomorrow there. So that's what we'll be peaking at when it comes to Meta. So EPS came in at $8.02. That beat by $1.26. That's a decent beat there. Revenue came in at $48.4 billion. That beat by $1.4 billion. This is an impressive beat here because expectations for a company like Starbucks and expectations for a company like Meta are night and day. We already knew the Starbucks expectations weren't all that great, and they still barely beat those. Meta, though, the analysts are beefing up those expectations on a quarter by quarter basis, and they continue to print out impressive results and not only meeting them, but beating them. These are companies that you're going to see drastically different from Meta and Starbucks. Again, we wouldn't compare the two because they're in different sectors from a valuation point, but just showing you the difference of a company that's firing in all cylinders and a company that's sputtering right now. So nice beats there. You can see revenue was up over 20% year over year. Daily active users here 3.35 billion, that was up 5% year over year. Ad impressions up 6%. So not only are more people using all of the across their platforms, more people are seeing all of these ads, which allows Meta to increase their price per ad. That helps them generate revenue. Their average price per ad was up 14% year over year. And look at this. For all of the folks that are looking and believing that DeepSeek created that model, didn't steal it, which that is some of the accusations right now, that they stole a lot of the stuff from OpenAI. We'll probably hear more about that in the next coming months here. So that could be true and not true. They didn't include a lot of the costs that were upfront research, which was noted there. So even if we believe that that is true, if the case is that AI costs are coming down, the first company, and I put it in my latest video, hopefully you guys got a chance to see that I put out this week, yesterday, was talking about Meta. This is one of those companies that is going to benefit the most because they are putting in $50-60 billion in CapEx, most of that going towards AI and their virtual reality stuff there. So again, this isn't a company that's, building their own chips and they rely on customers to buy those chips like NVIDIA. This is a company that's trying to implement AI into their suite of products that they have there. So, but when they came out and gave guidance today, their CapEx is still sitting between $60 and $65 billion. Where's a lot of that money going towards? It's going towards chips. What chips are they mostly buying? They're mostly buying NVIDIA chips here. So no change on comment on that coming down. And again, a lot of the demand, the large language model can be looked at as the commodity when it comes to AI. It's what can be built on top of it that is really going to make those massive differences there. So we'll have to see how that plays out. Although I had an option play to the upside, and we'll be able to profit from that. I'll be happy about that. But part of me was hoping for a little bit of a drop here that'll allow me an opportunity to get into shares of Meta. That's a stock that I want to build a position in and have it be a sizable position there, because I continue to love what they're doing over there. So, excuse me, that's where we're at on Meta platforms. Now let's take a look at Microsoft. So Microsoft after hours is down 5%. So they're going the opposite way. And let me give you the updated numbers on my side screen here. So they're down 4.5%. So not much difference than what I have there in the slide for you. EPS came in at $3.23. That beat by 13 cents, and revenue came in at an impressive $69.6 billion. That's a quarter, folks. 12.2% increase year over year. That beat by $790 million there. So not as impressive as a beat as Microsoft or Meta was, but still beating on the top and bottom lines there. However, what were some of the concerns? Again, we're getting back to the cloud growth, but Azure grew 31% year over year. Intelligent Cloud was up 19% at $25.5 billion. And 2025 CapEx is going to continue to be sizable there from that perspective. So let's take a look at the charts here really fast for Meta. What do we got? Mark, on the call today, Meta said, and I haven't had a chance to say the call, but so what do we see? They're focusing more on their own chips. So yeah, they have talked about it in the past, very similar to Amazon, where they want to build their own chips, primarily going to be using them a lot themselves, but they're going to find customers as well. And that's that long-term case against NVIDIA. It's very similar to those that look at data center REITs. There's going to be a need and a demand for data center REITs, but these large hyperscalers, although they utilize data center REITs, they're continuing to start building out their own. But again, the demand keeps going higher. They haven't lessened their exposure to what they lease. They just know they need more data center space. So instead of leasing more space, they're going to start building out their own from that perspective. So it's not going to lessen anything that they have with Equinox and DLR and things like that. So it's a similar aspect in the chip approach for both Amazon and Meta, where they're going to look to build their own chips to a degree. Again, I still think those are Meta's a little bit further behind than the likes of Amazon. They're already having sales and customers and things like that. So, but I think that's more of a longer term headwind for the likes of NVIDIA. I don't think it's something to be all that concerned about here for the next few years. But again, just my take from that perspective. Alrighty, so let's jump over to the get get that off there. Let's take a look at Meta shares. So as you can see right here, so we're looking at the charts here. This is Meta Platforms. So let's take a peek at where we think Meta is going and why, I liked Meta here. So right now with post earnings, you can see our RSI is now creeping above 70. We like to see that between 70 and 30, 70 being the high end, showing that, hey, this could be an overbought company. Anytime we're at 30 or below, that could be looked at as an under appreciated and a time to potentially buy from that perspective there. So as you can see, not all that intriguing, but we are trading at all-time highs up there. This continues to be the area that we would like to buy, that $600 range, because you could see the long-term support line moving up in a diagonal fashion there. So if we do get, a little bit of profit taking there, or if we're looking to utilize some options, that's going to be the stock price that I'm looking to aim at when it comes to Meta there. Let's take a look at a few others. How about we check out Microsoft to see what's going on over there from that perspective. So if we take a peek here at Microsoft, zoom in for you, we could see not much showing on the RSI, so not overbought, not necessarily oversold. They've been trading in this range that you could see that red line going up there, upwards, and then we have our support line coming down. So what's that put us at? Around 420 is kind of that support line that they need to hold, 420, 421, which as you can see post after hours right now is where they're trading at. So tomorrow's going to be that key time. Are we going to break lower? Usually when we break support, we see a stock that's going to fall, and it usually doesn't just fall a few bucks. It'll be a little bit more sizable there. Where's the next level of support? We're looking at that $405, $400 level is where Microsoft could potentially fall if they do not hold that support level there from that perspective. So a lot more downside could come with them. Tesla was another company that reported earnings there with, take that all with a grain of salt on when they believe that autonomous driving will be coming, when the robo taxis will be coming. But this is a stock that was as high as 480 and change. It is now down to 389. So again, this is proving to be a little bit of support here right around that 385 level. Not a lot to look on it, but we have our we got? Our 150-day moving average, our 200-day moving average is sitting right there. So that would be the ideal ranges if I'm looking to utilize options, which I'd love to utilize options when it comes to Tesla because they provide huge amounts of premium. And those huge amounts of premium is how we generate our $5,000 minimum goal each and every month from that perspective. So you need companies that have a little bit of volatility to get more of that premium. Usually when the VIX goes up, that's going to juice more premium. And we're going to talk all about that in our workshop there tomorrow. So not a ton of movement when it comes to Tesla right there, but they've been kind of in that downward trend overall. But something to watch there on around that 385 range is where you could potentially nibble at some shares overall. So Tesla's at 406 now. Yeah, 406 and change is where they're at after hours there. Jay Savage, how much capital are you using to get 5K a month? So I have various different accounts that I utilize some options in. So if I utilize a lot of it's going to be in a taxable account. But at the same time, I utilize my Roth IRA, but there's going to be different rules to them. So with the Roth IRA, you can't dip into margin whatsoever. It has to be the cash that you have available from that standpoint compared to a taxable account. Although it's not one that I ever tell people to utilize margin, I'll dip into margin, albeit slightly from time to time there. But the question that I get asked a lot is, Mark, if I'm looking to get into options, what's kind of that minimum amount that I need to have in availability to kind of trade with there? And I tell them the very minimum, usually around $5,000. If you have a $5,000 account, you can utilize some of these option trades. Ideally, probably going to be 10 plus there. So if you come in, you got $1,000 from that perspective, there's not going to be a whole lot of options that you'll be able to, no pun intended, that you'll be able to utilize there. But at the same time, I usually have a number of folks that come through the workshop not with the intention of the next day going into trade options, but with this being their base now to continue to learn them and start doing paper trading. That's what I always suggest people that are brand new to stock options is start with a few months of paper trading. Okay, if I wanted to buy this stock and do a cash secured put or something like that, I'm going to pick this strike price at this expiration date. Let's see what happened, and let me track it as if it was a real trade. But in fact, we weren't using any real dollars. We were using paper money there. So a lot of people continue to do that as they're getting started in stock options there. So who can join this stock option program that we're talking about here? It's going to be people that are brand new to options. It's going to be people that have, 1 to 5 years of experience that looking for another nugget to take away from there. If you come in and say, hey, I've been doing stock options for 10 plus years, probably not going to be the workshop for you. Generally, most of the folks are coming in here have that 5 or less or are brand new to options there. So again, we'll be going through 6 different strategies in tomorrow's workshop. It'll be starting at 8 p.m. It'll be live casted here. So once you sign up for it, you will get a link that'll be emailed back to you, which is how you're going to access the live show from that perspective there and go through and see all of the trades that we're doing. So again, completely revamped. If you've taken this in the past and you're looking to take it again, this will not be the same thing. This is going to be our new 2025 edition, which I think is going to be our best edition yet. So that is all I have for you guys today in the stock options live show here, our after hours. So again, I hope you guys can join us for the option workshop tomorrow. The link is down in the description below. We do have roughly about 15 spots left. So if you're on the fence there, make sure you do get your registration through so that you can claim one of those final spots before we fill up. And that's how many people they allow us in the webinar room from that perspective there. So thank you guys again for joining me for this stock market after hours. It's been great being with you again. Again, do not let emotions creep in to your investments. Let valuation be the leader. Take a step back, zoom out there, okay? Never let one-day trading end up resulting in something that you've built up because you can see a large bounce back in a sizable stock there. So I hope you guys stay safe, happy investing, best of luck, and we'll see you next week. Hopefully we'll see you tomorrow at the workshop. All right, take care.